Dear students, we will do module 33. We are starting a new head of income, that is income from other sources. In this module, I will explain the theoretical concepts of income from other sources. So let us go into the details. So nature of this head of income. We have five heads of income: income from salary, income from house property, income from business or profession, capital gain, and income from other sources. So if an income which is not possible to include under the four heads of income, first four heads of income, that is salary, house property, business or profession, and capital gain, that will be treated under income from other sources. So that two types of incomes are covered. One is general income, which is covered under section 56 subsection 1. Second is specified income, which is explained under section 56 subsection 2. Now let us see what is general income. General income, royalty, you know that the amount we are getting for writing books. Remuneration received for a director, not an employee, because it's, if an employee, it will come under salary, employer relationship is there. Director, if he's getting for sitting fees, it will come under income from other sources. University remuneration, see, I worked as a university professor, but when I'm doing university remuneration, then it's treated under income from other sources. Then interest on loan, securities and deposits, bank interest, securities and all will come in this. Now income from subletting of the house. Subletting, you have taken the house on rent, you are subletting to somebody. Tips received by waiters and taxi drivers. Family pension received by legal heirs of an employee. The employee died while in service, then the family members are getting the pension. Income from undisclosed sources, but taxed at 60% flat rate without allowing any deduction. Undisclosed source. If you are not able to explain the source of income, this will be the treatment. Next is incomes of other persons to be included in the income of an individual. See, if you have transferred the house property to a wife, she's not working, or to children, or any other close family member, just to avoid the income tax payment, that will be clubbed with the income of the SSC. So that will come under income from other sources. We have to learn that in detail. Income from writing articles by non-journalists. See, if I'm writing an article in a newspaper, so it will come under income from other sources. Income from agricultural land situated outside India. Agricultural income from India is exempted, but if you are receiving from other country, it will come under income from other sources. Remuneration for lecturers received outside India. See, if I'm going to UAE for taking a class, I'm getting some amount, so that will come under income from other sources. Agency commission received from mutual fund, post office or LIC agents, if it is not their regular business. We have worked out problems also in business income. 33 and 1 by 3%. They will allow as deduction, because LIC agents, most of them, it's their only source of income. So to get them tax benefit, they are allowing this ad hoc commission, 33 and 1 by 3%. So that also will come under income from other sources. Now, what are specified incomes? Dividend, specified. It's come under the specific category. Winnings from lottery, crossword puzzles, horse races, card games, which are called casual income. It's not of repetitive nature. Once in a while, you're lucky, you're getting that. Interest on securities, if not charged under income from business or profession. If you're not charging interest on securities under business or profession, it will be taxed here. Now, any amount received under Keyman insurance policy, if it is not taxed under salary or business income. Keyman insurance policy meaning the topmost employee or important employees of the organization. Organization will take special insurance package. So that is the Keyman insurance policy. If it's not taxed under business income, it will be taxed under income from other sources. Now, gifts received exceeding rupees 50,000 in aggregate during the previous year. So, from many people, from which all sources, if your gift is exceeding 50,000, it will be taxed. We are doing a separate module on gifts, so it will be more clear in that module. Immovable property received without consideration exceeding rupees 50,000. This is also considered as part of gift. Immovable property without consideration. So it's a gift if the amount is exceeding 50,000. As per the stamp duty, it will be taxed under income from other sources. Any compensation received in connection with the termination of employment. If an employer wants to terminate an employee, sometimes they will give a compensation 3 months or 4 months based on the terms of employment. So that will come under income from other sources. Now, prescribed rates of TDS. TDS is tax deducted at source. If the price amount exceeds rupees 10,000, TDS is 10% for winnings from lottery, crossword puzzles, card games, TV game shows, and horse races. So that will be deducted, and the net amount only the person will get. Gambling and betting, there is no TDS. If the net amount received is given, or if the bank collects the amount, we have to get the gross amount. That how you calculate net amount into 100 divided by 100 minus 30. 30 is the rate of TDS. If it's 10%, instead of 30, we will put 30. So grossing up of interest, that we have to do it more in problems. I'll explain at that time. Now from assessment year 24-25 onwards, winning from online games are taxable at the rate of 30% plus surcharge if any, and health and education cess. So this is a change in the TDS. Now, basis of taxability of casual income. Casual income meaning it's not of repetitive nature. See, if you win a lottery, it's a casual income. So if the SSC maintains books of accounts, casual income is taxable as per the method of accounting followed by the SSC. If he is maintaining books of accounts, casual income will be recorded. Second option is, if the SSC does not maintain books of accounts, casual income is taxable in the year of receipt. Whenever it's noticed, it will be taxed, or received. When the income is received, it will be taxed. Now I have to explain about normal dividend, deemed dividend, and interim dividend. Normal dividend, you know that the companies are declaring the annual dividend. Interim dividend, in between two annual general meetings, if their company is declaring a dividend, it's called the interim dividend. Both are taxable. Deemed dividend, we need more explanation. So normal dividend, deemed dividend, and interim dividend, all these types of dividends are taxable under the head income from other sources. Normal dividend is also called the annual dividend, that will be declared with the annual general body meeting. Now deemed dividend refers to certain payments made by a closely held company which are treated as dividends for income tax purposes even though they are not formally declared as dividends. Closely held company meaning the number of shareholders are limited. Best example is the Wipro. Now, meaning of deemed dividend. Meaning of deemed dividend, when a closely held company, that is a company in which public are not substantially interested, gives a loans or advance to a shareholder holding at least 10% of voting power, or a concern, that can be a firm, HUF, company, association of persons, etc., in which such shareholder has a substantial interest of 20% or more. Such loan or advance is treated as deemed dividend to the extent of accumulated profits. So it is not dividend declared, it's a loan given to a shareholder, which is who has substantial interest in the company. Now what are the conditions for deemed dividend? Company must be closely held. The recipient must be a specified shareholder or a concern. Shareholder must have minimum 10% voting right, 10% or more. Payment should be a loan or advance, not in the course of business. They are taking loan from business. Deemed dividend is taxable only up to accumulated profits. Now, example for deemed dividend, a closely held company gives a loan of 5 lakhs to a major shareholder holding more than 10% shares out of its accumulated profits. This loan is treated as a deemed dividend in the hands of the shareholder. This is what I wanted to explain in this module. Happy learning. Thank you.